Hey everybody, Jordan here, House Color Trading. Let me fix this a little bit. I'm just gonna go over the $1,000 challenge that we're gonna be doing at the end of November. This is just a quick video that I'm going to record and then upload onto YouTube. I'm not gonna be answering any questions or anything like that if anyone jumps in. This is just kind of like a flow, how to work out, what you can do, like how you're supposed to be going about it. Okay, so if you want to follow along and you want to be a part of it, you can go ahead and do so. All right, so without further ado, this is Tradeovate. So what you'll do is, let's go ahead and log out. See if I can figure out how to do that. Give me 1 second. Let's see. Trying to figure this out. I haven't actually tried logging out myself yet. No. Okay, so I can't figure that out. But the way we'll do it is we will just simply exit out. Do Tradeovate. Do that. Log in. Okay, so what you'll do is you'll create an account, right? Log in. You'll do live trading. Okay. Make sure that this is your save. Okay. So you'll do live trading. Start trading. You'll see this here will be 0. Okay. What you'll do is you'll click here, application settings. You'll go to, first of all, your subscriptions. You do not need this subscription. I actually canceled it, which is why you see it not, why you see it's being canceled on December 1st, because once I really looked into it, I realized I don't need it. The one you do want, though, is this right here. So it's $39 a month. And then you're going to want to go to where it says add-ons here, and you're going to want to, if you're going to be trading with TradingView as well, you're going to also do this, which I recommend. I recommend doing both TradingView, because TradingView has a lot of indicators that are really good and helpful, where Tradeovate lets you use the tick chart, which is something that we'll be learning and talking about more later. So, and then you can just activate like these little things like this so that you can do what you need to do, right? The free things, definitely the tick stream. And so from there, you'll go and you'll be able to do right here, transfers and payments. You'll be able to fund your account, withdraw money, so you can then put money in your account. Okay. Now, how much did I put in? What have I been doing? So, I put in $500 recently. What was it? Last week, I put in $500, and within 1 week, and we'll look at it in a second, I've managed to grow it to $951.29, and that's with the fees already taken out. So, why are the tick charts important? Because they let you see things like your M's and your W's, basically market structure when it comes to futures, a lot easier. So you can do like this one, I have it on 238 MNQ, because MNQ is going to have more movement, so more ticks within it. When it has more ticks within it, you need to make sure that the chart has a bigger time period when it comes to the ticks. So MES moves less. It's a little more boring, as people call it, but this is what we're going to be starting with at first. So you're going to go ahead and fund your account $500 to $1,000 by the end of this month, which is uh, November. And what you're going to do is, whenever I go live, you'll basically see me go live here on Twitch, and then you'll see me go live on TikTok. I recommend actually going live here on Twitch, like watching it on Twitch, and just so that you can ensure that you're seeing the whole screen, you're seeing kind of my movements, what I'm talking about, what I'm doing, etc., etc. Okay, and basically the idea is we're going to try and just consistently make some money after, like, you would get off of work. So from maybe 5:30, really I'm probably going to get on around 6:30 p.m. Central time, somewhere around there. 6:30, 7:30, get on, trade for about an hour, get off, put my son to bed, maybe get on for another hour or so after that. We'll try and make about $50 to $100 every night. And then as we scale up and we start making more money, say we get from $1,000 to $1,500, $2,000, etc., we'll start making more like 125, 150, and we'll be basically scaling up with our portfolio. And once we get this from, say, the 1,000, the original 500 to 1,000, to maybe like 5 to 7,500, we can start experimenting with one or two in-queue contracts at a time, and just kind of getting the feel for, like, okay, here's a whole $100 move in one play instead of the entire day, and just kind of letting that get through. So we'll slowly move up. This is kind of just to show you guys how you can build a small portfolio just playing futures. You don't have to worry about options, Greeks, and theta and stuff like that. This is kind of like playing that without those in working against you. So you'll do that. You'll end up using your same, basically, let me log out of here so I can show you how this will work. So what will end up happening is, if you decide to use Tradeovate with me, so let me go ahead and get off of here because that has a lot on it. And it looked kind of crazy. But what you'll end up doing is you'll come on here, you'll get your subscription for, I have Pro Plus, that's fine. I recommend that one. It's about, you'll end up paying another $40 a month total with your data subscriptions. You need to get your data subscriptions on here as well, which is like another $15. So this is 30 and then 15. So you're paying about another $45. Overall, you're going to end up paying like $100 total a month for your fees and subscriptions over this and this. So between the two, you'll end up paying around $100 a month. Not really that bad, considering I made $500 in a week starting with $500. So, well, $450. Okay. But anyway, what we're going to do is, you're going to come on here, you're going to get your trading view set up. What you're going to, what indicators you're going to want are, you're going to want your auto harmonic patterns, V2. You're going to want your ATR versus DTR plus ADR zone. You're going to want your session volume profile and your TTM squeeze pro, and then last but not least, your Williams alligator. And then we're going to go through the settings for each of them now, and then go over basically how to use them and how we're going to use them. So let's turn everything off and go through them one by one. Okay, So, what you have here is your Williams alligator. Your Williams alligator is going to be your 9, 21, and 200 EMA. You're going to go to your settings. You're going to make jaw 9, teeth 21, lips 200. You're going to make your jaw offset -6 and your teeth offset 0. Lips offset should remain at 3. Style, make the colors whatever you want, but when you click this, make sure that the thickness on the bottom is all the way to the maximum. Okay. Just make sure that they pop and that you understand, you know which one is which. Okay. So for me, this pink line right here is my 9 EMA. This white line is my 21 EMA, and then this purple is my 200 EMA. How do I use them? Well, simply put, when your 9 crosses above your 21, it signals longs, calls, whatever. So for us, on the 1 minute, let's say MES, 1 minute. Also can put this on Tradovate, and the way that you put it on Tradovate, let's go ahead and show you how to do that. You'll go to where it says indicators. You'll go to where it says moving averages. You go to exponential moving average, and then you'll add your 9 separate. You'll put whatever color you want. Make sure that the line thickness is, up. You put your shift the same as the other one, so -6. Okay, and then you'll add your 21, and then you'll add your 200. So for me, this green is my 9. This blue is my 21, and then this purple is my 200. So 9, 21, 200, and what I should do is, this should be -6. I hadn't adjusted that one yet, so it's good that I'm doing this, and then this should be 0. Okay, so again, when the 9 crosses below the 21, it signals puts, and when it crosses above, it signals calls or longs. Okay, so I could have longed here and made quite a bit of money, and then shorted here for this short bounce and made money. And your 200 EMA, what you're using it for is for bounces and for really strong breakthroughs that can eventually go your way. So basically what will end up happening is, and if you look at it over a good chunk of time, what you'll see is we bounced off of it, we bounce off of it, we bounce off of it. Eventually, when we break through, it's a really strong move down. We basically get boinged back up. This is also a strong move up to come back down for another strong move down. We chop here, come up, and then we stay up, and we keep bouncing. Okay, and then another break down, bounce off, break through, bounce off, and so on. Okay, so you can use this for entries in terms of, hey, are we going to bounce or did we break through? Okay, to enter a play. Or if you're in a play, you can use it for an exit. So in this case, when this crossed below here, you would have entered a short, you would have exited here, and then entered a long on the bounce up and stayed in it because this crossed up, and then you could have, ridden that all the way to your heart's content. Basically, you would have made a bunch of money. So that's how we're going to use these. Your tick chart, when it comes to here, the way that you're going to do it is you're going to go to where it says time period, and you're going to take it all the way to where it says ticks, and for MES you're going to put 119 or 238, whichever you prefer, and you're going to keep it like that. Okay, now continuing on TradingView for our, because that's the only indicator that you're going to put on Tradovate. So continuing with TradingView, let's go ahead and look at it like this. So again, this is what we're looking at. So same thing, just on here. Okay, next we have our TTM Squeeze Pro. It's going to be as is. You're not going to change anything about it. what is it showing you? What are you looking at? So it's basically an indicator to show you pressure. Green means that there is no more pressure. Pressure has been fully released. You're basically gonna free move in whatever direction the wind takes it. Okay. So if you go green to black, that means pressure is building. Okay, so from here you had pressure was no pressure, pressure built, black turned to red, which means high pressure, and immediately that pressure started releasing because red turned black, and that's what that means. When it goes red to black, that means that the pressure is being released, and then when it goes black to green, that means that there is no more pressure. Okay, so basically what you're looking at here is you're looking at pressure. That's what this boing is about. It's starting to build up pressure because there was no more. It's been released, going upwards, right? Released up. Now pressure's starting to get built. Pressure gets built and immediately released downwards. And now you have no more pressure, so you start building it here. And gold is the highest level of pressure you can get. So basically you'll go green to black to red, sometimes gold, but most of the time red turns back to black for releasing pressure, and then green again. So what happened here was you went black to red to gold to build high pressure, and some of this pressure got released here, and then again back upwards. So that's why you went from gold to red to black. But then that black went back to red because pressure started building back up, and this was some of the pressure releasing slowly and then being built back. Some of that pressure got released downwards right here, and then it built back, and then it's got released very quick and fast upwards. So it's not going to necessarily tell you which way that you're going to move, but it is going to tell you that there is a nice, quick, violent move coming in a direction. You need to be either prepared for it or not in something, unless you know which way that direction is going to go, unless you're very highly confident in what direction that's going to be. So it's a good kind of like, hey, I should kind of hold off for a second, or we've been kind of down here for a second, maybe we're going to pop up. We do need to kind of come back and touch this 200 EMA. Maybe now's my chance to enter. Boom. Go ahead and ride it up to 200 EMA, and this is well over a couple $100. So that's how you can use this indicator in tandem with this, right? So you see this pressure building, you see it start getting released. This crosses up. You hold this. Now you notice that the pressure gets released upwards. It's still getting released up. You exit. You re-enter. See, you exit here because now pressure's starting to build again because you're going to chop for a second. Then you re-enter on the crossover because that pressure is getting released, and then you can exit again when this pressure starts building, and then if it starts releasing again, enter. Okay? It's pretty straightforward how you can use these together. Now next what you're going to do is you're going to turn on your, or you're going to be looking at your harmonics patterns V2, and we're going to look at the settings for it. So you're going to immediately go to Style and uncheck Tables. You're going to go to Inputs, and you're not going to change any of this stuff. You're just going to go down to here, and you're going to make sure only these and these are the ones that are checked. Everything else needs to be unchecked. Okay? So I'm going to give you a couple seconds to look at it. Follow along. You can pause the screen whenever, and then you can unpause it. Okay, so that's it. Plain and simple, what's going to happen is this is going to pop up something that looks like this. You'll see it in a second. It'll pop up, potentially. Okay, what you do is you take the entry. The entry was actually over here, and you're going to basically try and ride it up until your target. You don't have to do necessarily its target, but your specific profit take. So for me, it is usually on the smaller time frames, on like the 1 minute when we're doing our futures, it absolutely hits the 1 minute. It usually hits I mean, not the 1 minute. It usually hits the first target and usually even the second target. So what I'll do is I'll hold for the first target, sell, and be done, and then just use the rest of my indicators to get me other entries and whatnot, and exits. But on a time frame like this could take a very long time, and this could very well like go down to here and then come up and then hit this first target later. So we still have some time on this, but as of right now, it is moving towards the stop, and it got very close to this first target, but didn't hit. But just so you can visually see what it looks like, these work out about 7, 8 out of 10 times, especially on the like 1 minute time frames on MNQ, NQ, MES, and ES, which is we're going to be trading MES. So nothing is on here at the moment, which is why there's no patterns. So next we have our session volume profile, and what this is going to show us is basically I guess it's not going to be on here for this one, but let's look at it on here. Okay, so what this is going to show us is bearish versus bullish volume. So obviously this side is bearish and this side is bullish, and it's giving it to you in levels so that you can understand where you may get knocked down, where you may pop through, if you pop through, where you'll continue up, etc. Okay, the areas that are like obviously highlighted, this is your big volume area, like where you can expect the most movement, which as you can see, this is what happens, right? So this right here is called your point of control. Basically, think of it as another kind of area of interest for breakthroughs, chop, and rejection. So, as you can see, we moved up here. We basically barely broke it and then popped back down, came back up, double topped, and did the same thing. So this would have been a good point of entry. And then you could have averaged down, a couple dollars if you wanted this direction. But you would have easily got a very good play down here and then down here. So volume profile, ATR versus DTR. This is also going to be kind of like a ranging indicator. It's going to give you a low, it's going to give you a high, it's going to give you two 50% lines, which are basically from your open week and where you currently are. So this is where we opened the week at. This is where we opened Friday. Okay, so it shows you the open for the day, and it also shows you the open for the week, and then it gives you these 50% lines, your upper and your lower. Now, how do you use these? The 50% lines, similar to your point of control, just look for either a breakthrough, chop, rejection on either or. Same thing with your open and your open week. And basically your upper and lower ranges tend to be areas where you reject strong, and if you break through, you move like very strong back in that direction, like you stay going in that direction for a good little while. So that's what happened here. Is we basically we hit open a couple times here. So we broke through a point of control. Next area of interest would have been our open, which is exactly where we went. Dropped down. We went to our lower ADR the first time and popped back up. The second time we broke through it and we moved pretty good down. Came back up to touch it, went back down, and then finally broke back up and through it to hit our point of control and just chop for the rest of the day. So that's how you can use this in tandem with everything else. It's very basically what you're doing by adding these layers is you're adding areas where you can then have exits, high probability exits for, like, say this, you went long here, right? You could have had an exit here, just like how you could have had an exit here the first time. And if you broke through, then cool, then you can re-enter and then have another exit here, and if we break through, cool, you can re-enter and then have an exit there, right? So this is just kind of adding little extra layers so that instead of holding for a home run, you hit several base hits back to back to back to back, because those are going to be more high probability. You're more likely to be successful with those than you are going to be trying to shoot for a home run repeatedly. Okay, so that is all the indicators that you'll be using here. And again, we'll be trading MES. You'll be using the same things here in tandem with this. I did forget about the two that you'll be using to draw on your VWAP. Just your VWAP will be basically anchored onto the opening candle of the day before. So let me go ahead and do this real quick. Okay, so futures open at 5 p.m. Central every day. So basically VWAP, wherever your volume profile is anchored to, you also put your VWAP. And your VWAP is going to have a couple deviations to it, so let's go ahead and check our settings. So basically I have my 618, which is based off of a fib. You have your 2, also based off of a fib, and 3 based off of a fib. And then you're going to change your source to this right here. Style, if you want yours to look like mine, pause the screen and do it like this. Okay? So, what is this going to do? This is going to be similar to your 200 EMA, this thick line right here. If you want it to be exactly like mine, sorry, you need to make sure that this line, this one right here, is the thickest one possible, and the others are the thinnest one possible, so that it'll look, similar. And basically, what you're doing is, this is similar to your 200 EMA. You're looking for major resistance. It's going to chop a lot. If it breaks through, it's going to be really strong. But it has a tendency, so like when they sit on top of each other, if you break through your 200 EMA, you usually bounce off of your VWAP, right? And if you break through both, you end up slingshotting back, usually. Like, think of somebody who jumps in a pool with a basketball. You go down so far, and then the air, when you release the basketball, makes the basketball shoot into the sky. That's exactly what happened here. That's what happened here. Okay? And here, right? So you had 3 instances where it happened. This one took a little longer, but it had created more pressure to do so, but it still happened. So you use that. Whenever you break basically each one of these lines, so this is your 618, this is your 2, and then your 3 right here, you basically end up going ranging from 1. So, we started out directly in the yellow range. We broke immediately out of the blue, which is the 618, so we were already in the 2 deviation from the get. So what you can expect is basically here to here all day long. And that's exactly what happened. We ranged from there to there basically all day long. So you can use these as, again, high points and exit points, and entries and exits. And then your fibs, you're basically whatever direction you think you're going to be going in. So if I think we're going to go up, I would pick a high and a low, and I would draw it going from the bottom up, because I think we're going to go up. If I think we're going to go down, I draw from the top down. So in here, I want to show you how you could have caught this. Let's say this already happened, but we're like right in here. Okay? So I'm going to say this is my low, this is my high. Let's show you our settings. Take a screenshot. These are the only things you're going to change. So take a screenshot, pause the video. Cool. Alright. So, high and low. Now every single one of these lines is an upwards, not downwards, upwards, whenever you reject and you break through going upwards. So every time you reject and every time you go up, you enter a long or a call, and you exit at the next line. Okay? So in this point, we did this. Okay? Let's say we were here, right? We just had this happen. Boom. We reject off this one, we enter a long, we exit, we re-enter on the breakthrough, we exit. You can consider this an entry, and maybe you exited here, maybe you didn't. If you exit, you end up exiting for 0 because you exit again. Your stop loss is the same line that you entered on. So if you exit 0, no problem. You do this fuckery right here. You end up coming up and you end up writing all these upwards. So you basically get, if you're not fast enough to exit, like, on each one and re-enter, you end up entering and exiting somewhere probably in this area and then re-entering here and then exiting here. And again, you're not doing any of this downwards, you're doing them all upwards because that was your bias. Now, whenever you decide to flip around, you can say, okay, I want to draw it downwards now. Let's say I'm going to do this. Well, this is my downwards, so we end up moving upwards right after this, and you're like, oh man, I don't know. But then you break down, and you can play all this downwards. It's up to you how you want to draw them, but you need to understand however you draw those fib lines, you need to play only the direction that you drew them for. And that's the best advice that I can give you. Those golden zones are your areas of major interest for, if you draw them upwards, the bottom one is your major interest for a big move upwards. If you draw it downwards, your top one is your major move downwards. So what usually ends up happening is you get in your golden zone and you move up to your second golden zone, and then you drop back to your first golden zone to have a very violent move back up to your second golden zone, which you then usually propel even higher than before, which is exactly what happened here. But then that momentum dies. You never know exactly when. So I would have said maybe like right here, when we got below this high right here, I would have said that momentum was dead. And what I would have done is, this is when I would have personally drawn downwards. I would have drawn from here to there. This was broken, and then I would have played it downwards, and then we broke down through my lines and we stopped. Basically, we were out of my lines, which is right here-ish, right there. Then I would have redrawn them again. So I would have done from here to maybe there. Okay? And I would have just said, hey, this is my new low, and dragged it down to there. And then played that. And then, again, because this is our second line, our second fib area, we propel up, which I would have known, right? So I could have, again, redrawn going up. I could have just said, hey, look, I'm going to just draw them this way. And maybe I could even keep both of these on here. It's going to look a little weird, but I know which one's which. This one's smaller. So this little gold zone is going to throw me up. We go up again. We go into our first pocket of downwards, and then we start dropping again. So this will probably go back down. And that's how you use everything that we use on our chart. As we start trading again, we're going to be doing this like when people are off of work, starting basically look for it on the 1st of December. We'll be starting doing it then. We'll be doing it over, breaks and stuff like that when people are off. If the market's open, we'll be doing it then as well. You see me go live here. You can put your alerts on. You can see me go live on TikTok. Make sure your notifications are on. Excuse me. And just basically, you'll see more practice with this. You'll start understanding my entries and my exits a little more when it comes to this, when it comes to using the tick charts and seeing, W's and M's. W's basically, when they're staggered, usually drive us down unless you go above the high. So this one was broken, right? This was actually a picture perfect W. You can consider this maybe as the drop, but the 200 EMA drove us back up, which then made it invalid. And actually ended up making some M's in here. Ended up making several M's that drove us up. And then we started going down. No W's here though, just going down. Would have entered again here, so basically been in a short here, exited here, re-entered, exited somewhere probably in this area right here, re-entered on the drop there, and re-exited somewhere around here, and I'd have been done. So tick charts are really great for seeing movement on futures. As you can see, this is very, very clean. That's why you only need the 3 little indicators on here. And I just want to get you guys excited, show you, made $450 off of $500, so almost 100% in 1 week. And let's go ahead and take a look at that. So this week, right? So I was profitable 83% of my trades. Um, this is how much money I have. This is how much money my P&L is. So you can subtract that and see I started off with $500. My fees were basically $100, so I really made $551. So technically, I did 100% my portfolio. If I had 0 losses and 0 fees, I would have made $827.50. I lost $276. I lost 12 trades. I won 66 trades at a total of 79. Somehow. That doesn't add up. But somehow. Oh, because I had 1 trade or 2 trades that also were just straight up even. So that's why. I remember that. Break even trades. Boom. Okay? So, what are you looking at? This is showing you with my losses, I expect about $7 per trade, even with my losses. Okay? All my winning trades, my average winning trade is about $12.50. So I'm not looking for a whole lot. I'm looking for basically consistent $10, $15 over and over and over again. $7, $15 over and over and over again. When I do lose, I lose about $20 to $30. So my average is about $23 in losses. And yeah, this is just, so yeah, this will actually show you. So look, this is how much I made on most of my plays, right? So this was negative 20, negative 22, negative 15. I made 7, 5, 2, 6, like real small amounts, 30, 30, good plays right there. Right, this was a big loss, sucked. Took it on the chin. Made it back, easy. So yeah, you can see the P&L here. It's nice, crisp. I like Trade-O-Bait because you can do this. You can see your own performance. You can see how you've been doing. My longest trade was almost 3 fucking hours. That shit sucked. I ended up watching like 2 episodes of something at that. It was ridiculous. But average trade, and this is why it's great, because you're not glued to your screen. You're not stressed out. My average trade's almost 10 to 15 minutes. I'm able to like add in. This is why I like trading at the times that we're going to be trading in, because you can hold on to something, add into it, let it do its thing, make a little money, and then get out and rinse and repeat. Do that all night. Do it on your lunch break. I might even go live. In normal times people go on lunch breaks, which is maybe an hour before power hour, or even an hour before that, 12, 1 o'clock Central. I'll see if I can do that too. So I just wanted to give y'all a little video, put it on YouTube, show you guys, how you can set this up, what you're going to want, and, how to be successful, what we're going to be doing, and what we're looking for. All right? So get excited. I'm super excited just being able to see that I took $500 to almost $1,000 in a week. By the time December starts, I might very well have, almost $2,000. So we'll see. I might just have to send myself $1,000 back into my bank account, which is fine by me. Or I may just keep it in there and, fuck around with it. But we'll see. So y'all have a good one. I just wanted to show you this, and see you when I see you.